Welcome to The View from here. I'm Matt Driskill, live, sort of, in Singapore. That's right. We made the big move from Hong Kong a long time ago, and we're broadcasting live, sort of, from Singapore. Today we are continuing the FCC Speaker Series. We have Dr. Yifan Hu, Chief Economist at Haitong International. Her topic today, China's local government debt saving for a rainy day. It's an examination of the sustainability of China's local public financial institutions. A little bit more about her in just a minute. Many of you know the FCC in Hong Kong. Many of you know it's a key stop on the itineraries of the most well-known people in the world who happen to be passing through the city. The View from here is pleased to announce we've got the complete set of speeches dating all the way back to 2007, and we are uploading each and every speech from 2013 as fast as we can, and this may actually be our last one from 2013. We're going to get on to the next one, 2014, this week. Speakers and topics in the series include people like Mia Farrow, famous actress, outspoken activist on China and Darfur. We've got Bill Clinton in conversation with Lee Kuan Yew, the founder of modern-day Singapore. And we've got people like Chris Patton, the last governor of Hong Kong, before it was handed back to China. We've also got people like comedian, author Michael Palin of Monty Python fame, and we've got many, many more. Check back frequently on The View from here to get the latest podcasts. Don't forget, you can also log on to iTunes and subscribe to The View from here. That way you won't miss a key speech. Just go to the iTunes store, do a search for me, Matt Driskill, or The View from here, and subscribe. And that way each and every speech should be downloaded straight to your iPod, your iPhone, or your iPad. A little bit more about today's offering. As I said, the topic, it's a mouthful, China's local government debt saving for a rainy day, an examination of the sustainability of China's local public financial institutions. The speaker, Dr. Yifan Hu, Chief Economist, Haitong International. She's also a visiting fellow at the Peterson Institute for International Economics. According to the propaganda I've been handed, Dr. Hu examines the levels of government debt and the sustainability of local public financial institutions in China, and it's a huge problem, actually. The most recent official estimate of local government debt outstanding was 10.7 trillion renminbi as of 2010, according to China's National Audit Office. Of course, the data from China you can usually not trust. The best guess of overall local government debt equals 40 to 60% of China's GDP, or nearly 3 trillion renminbi. With debt and investments at various levels of maturity, the most pressing concern now is not insolvency, but liquidity. Are China's local government debts within a manageable range? She's using insights from her recent book, Strategic Priorities, China's Reforms and the Reshaping of the Global Order, and she talks about the short-term and long-term measures needed to deal with the sizable level of debt of China's local governments. As I said, Dr. Hu is Chief Economist, Head of Research at Haitong International in Hong Kong. Prior to joining that organization, she was Chief Economist for FCCHK Securities International in Hong Kong, Head of Asian Economics for Natixis in Paris, and Vice President and Strategist for Merrill Lynch in Hong Kong. She's also been an assistant professor at the School of Business and Economics at the University of Hong Kong, and she's published extensively in international and Chinese academic journals. She's also worked with the World Bank and KPMG, and currently, as I said, a visiting fellow at the Peterson Institute for International Economics. She's got a PhD in economics from Georgetown University and a bachelor's degree in economics from Zhejiang University. Well, that's it for me, Matt Driskill. That was a big mouthful. That's The View from here. As I said, stay tuned. It's China's local government debt. Let's see what kind of problems they have. Speaker Dr. Yifan Hu, she is next.
This is our last speaker for the season. We try not to schedule speakers too close to Christmas, but we didn't want to miss this opportunity to have Dr. Hu speak. She has a new book out, just out now, on China's reforms, very timely, coming out in anticipation, actually, of the third plenum. She has done her PhD at Georgetown. She worked at the World Bank. She's bounced through several different banks here in Hong Kong. She seems to lead a charmed life. She's just been named the top forecaster for 2013 for the Chinese economy by Bloomberg, and Haitong Securities just became, according to New Fortune, the #1 investment bank in China this year as well. So with that, I'd like to introduce Dr. Hu.
Thanks, Case, for nice words. So thanks, FCC, for providing me opportunities to have this kind of talk here. So I think the China's local government debt has been a very hot topic. So I think the market has been a little bit disappointed after the third primary recession because there's not so many measures to come out as expected. So here, we just want to continue this topic and to say what will be the government debt and how do we solve it. So I think as everyone knows, the local government debt has been surging for the past 5 years, especially after the financial crisis, after in the China stimulus plan, like a 4 trillion stimulus plan, and at the same time, I think that for the local government debts also have been increased very significantly. So I think that as early this year, triggered by the bankruptcy case of the of the Detroit City in the U.S., the Chinese government also started to worry about the local government debt in China. So the China's National Auditing Office has been requested to start a national debt tally on July 28th at all 5 levels of the government. It's including central, provincial, city, town, village. So before, for the most recent official estimate was on the RMB 10 trillion by 2010. At that time, I think the government only cover 3 levels of the government. So this time and this time and the coverage should be much more broad and much more complete. And the audit report is expected to be filed to the State Council before the middle of October. So that means actually before the ordinary press session, and the government already has a report. So that's the reason. So the market has high expectation, thinking the government will give the number and also give the measures to solve it. But however, I think finally the government didn't give the number. So then we still have to guess what the number it is. So based on the most official data, it's 10 trillion by 2020, but we know an increase very significant in the past 5 years. So according to our grassroots survey, we think the very close number will be around RMB 20 trillion. So that's about 40% of GDP. So plus China's, the central government, the debt, 20% of GDP. So the Chinese government debt is about the 60% of GDP. So as we know also, that's the general scenario, but so also I think that it's a very different across regions. So some regions, especially the NAO also conducted a survey at the beginning of this year. They conducted a survey for 36 cities, the capital cities. So they found actually 9 out of 36 cities, actually their debt already exceeds 100% of GDP. So that's very serious. So I think besides this kind of the very large size and also have the structural problems, because now we know 53% of the local government debt has 3-year maturity. Actually, 60% of the investment on the infrastructure had a 10-year maturity. So there is a large mismatch on the debt. So both the size and the debt are very big. So that's really allows a concern whether this debt is sustainable. So in our view, we think still it remains manageable. So we give the reason. So I think that's why we call the title as Saving for the Rainy Day. So we think it's not too late to solve the issue yet, because we have majorly 2 reasons. And the first, we think the debt remains in the manageable zone because it's backed by sizable assets. So now we find that for the China's, also based on according to the CAS, the China's government operating assets total now 21.5 trillion. And also 47.4 belongs to the local government. So that's mean about 10 trillion, belong to the local government. Non-operating assets amount to RMB 7 trillion. Natural resources estimate to be RMB 44.3 trillion. But that's mostly belong to the public government. But of course, this year's for the assets actually has been deteriorating also very fast as debt rising. So I think that's why we said the problem is better to solve sooner than later. So, but also at the same time, we also say there's strong tax revenue growth. So the tax revenue of the government doubled in the past 5 years, and it's like for the growth rate is higher than the GDP. So we think that continue will be the case in China because maybe it will gradually more the wealth allocation more tilt to the household in the future. But I think in the coming 3 to 5 years, this situation will not change. So I think that make the debt remains manageable zone. And we think currently the government don't give the number yet. So one of the reasons is that they are still not sure what the measures should be taken. They don't want this number to scare the public. So we think it's very likely for China to announce a debt cap, especially for the local government. So currently, according to the international experience, I think 60% of GDP for the for the safety line. So for the local government, we think it's very likely to set at the 40%. So with the cities with the debt heavily exceeds the GDP, may be requested by the central government to leverage quickly. So we think there's several short-term measures to deleverage. So as we know, we already mentioned that there's a large number of the local government assets. So for the sale part of the local government assets will be the fastest way to deleverage. So now recently we also say that Detroit City was finally penalized by the market, and then they bankrupted. So they have to sell a large number of the assets. So that's the situation. That's the case, I think, especially for the cities. Especially in the Yangtze River Delta and the Pearl River Delta, it's possible. Because as we mentioned, that's the 9 out of 36 cities, including this Nanjing, Changsha, they all have good assets on hand. The second, I think, is very likely. It's a restructuring by restructuring existing debts by asset management companies. As we know, the 4 asset management companies were established 10 years ago to help dealing with this kind of non-performing loans of the state banks before they are listing in the market. So I think that now they already almost complete that process, and they have now the assets and the cash on hand. So they also have the very strong appetite to restructuring this kind of existing debts. As you might know, recently for the asset management, recently just have one asset management was listed in Hong Kong, and some asset management are looking for the strategic partners. So they are try to get prepared for this kind of new restructuring. So we think it's very likely for them, the assets they are most interested actually for this kind of the city commercial banks. Because for many city commercial banks are held by the local government. So they are actually the big victims of the local government debt. So, but if you look at the banks, I think they have the good assets and distressed assets. So for the asset management company now very keen to buy the banks itself rather than buy the distressed assets only. But that have to wait for the green light of the CBRC. We think it's possibly to come for the coming 2 to 3 years. So then also it's a direct support by the central government that targets very heavily in that the local government with a lower revenue generating capacity. So if we remember, I just recall, before 2003, before the real estate market booming. So for the central government, actually almost every year or every 2 years, they have to wipe off this kind of the local government debt from this western or central regions as a support for this kind of for this region's growth. So we think it's very likely before they set up the cap, they have to ask them to deleverage. If they don't have assets to sell, they don't have the ways to be interested by to attract the market. So the central government have to do something to wipe off for them to start soon. So and also for the long-term measures to rebalancing local fiscal position. So here, since we have very limited time, so I just give you a very quick this kind of the general points. If you're interested, you can check the book. So for the longer-term measures, we think the first is we think that allow the local governments to issue bonds directly. So that has been discussed for a while. I think to my best knowledge, I think that almost was approved in 2009 because the government already gave the ratings to all the local governments. Then breakouts for the debt crisis for the European countries, so the central government hesitated, and I think now it has been greatly discussed again. So currently for the local government, they cannot directly issue debts. They have to issue debts through the central government, or they now can issue this kind of called the local government facility bonds in the interbank market. So that has been grew very fast, but was controlled by the central government. But recently, it's restarted again in October and November. That actually allows our concerns. So we think for the local government bonds directly, they are much more transparent. They should be much more responsible. It's much better than this kind of a local government facility bonds. So I think that will be the a trend for the future. So that's actually the recently why I think the government still hesitate. It's again because of the Detroit case. I think for this kind of they start to think about for the municipal bonds. What if they default? So I think that before the China has a more clear insurance system or a more clear investment protection. I think that they will probably wait and to wait for the market is getting more mature. Then the second way I think there's it will coming. We think soon as a levy property tax. It's also mentioned in the third plenary session. So the government already the first time clearly announced they will to legalize the property tax. So for the legislation of the property tax law probably will take 2 years. But at the same time, we already have the pilot programs for Shanghai and Chongqing. I think for the second batch of city, including Guangzhou, Hangzhou, Changsha, are also on the list. Why we think the property tax are the golden bullet? Because we know now the local government is heavily relying on the proceeds of the properties. So they have to have some financial sources besides this kind of rising tax revenues. So I think the property tax will be the golden bullet. Now if we look at the U.S. economy, actually the local government now the situation recover much better than the central government. The employment in the local government, according to the NFP, actually they increased in the recent 3 months, but for the central government is still cutting. That's because of thanks to the recovery of the housing market in the U.S. So I think in the future that should be the trend. So we also expect actually we have very detailed guess on that, but we don't have time to illustrate here. So for the third point, I think will be very interesting. It's a lower local government expenditure to closely reflect the tax revenues breakdown. The central government and the local government actually, after there's tax reforms in China in 2003. So now the central government and local government share 50% of tax revenues, but the spending proportions are 30 to 30 respectively. So this gap means that local government have to utilize the other funding source to make up the difference. That's why we said now they are heavily depends on the property proceeds in the future, or the property tax will be ultimate bulletin. So here you will find it's very interesting, especially for the public security, for the education, and for environment, and for this kind of medical health care. I think the government, the local government bear much heavier burden than the central government. But we think this kind of the burden should be gradually shifted to the central government. So it's to matching its a tax revenue breakdown. We also think that's much easier for the central government now, because if you just directly reform the tax sharing between the central and the local government, because it's much harder. So starting from expenditure will be much easier. So there is also prerequisite to be filled if you want to have a much healthier the government debt. I think the first is have to follow the rule pay as you go. You cannot be overshooting your debt. And also we think that there's a need for more transparent local government budget plan, provided the public with much more accurate information regarding their spending plans, and a separate management of revenue expenditure. So they have to give a very clear budget at the beginning, and also have sound technical infrastructure. So here, I want to mention, actually, it's yesterday for the central government just issued one the note and mentioned that in the future for the local government and to curb local government debt, actually the local government has to be responsible. That will become one of the evaluation term for them to assess their achievement. And also they said for the local government have to be responsible for the debt for their whole life. I'm not quite sure whether it can be fulfilled, but at least now it's put in the note for the central government. So finally, I just have one sentence for my book. So it will come out, the strategic priorities. So it's actually, lots of views on China's economic foreign affairs and foreign investment and government debt. So it's published by the Enrich Professional Publishing. It's just come out last week. So if you are interested, just could have a look after the meeting. Thank you.
Thank you very much. With that, I'd like to open the floor to questions. So while you think about your first question, though, maybe I'll put one in, which is you refer to a property tax as the golden bullet for dealing with real estate prices, and that would be the market-oriented solution. But one keeps hearing of property developers who say, well, they feel as though the initial land lease fee is in essence covering the property taxes for the life of that lease, and they've opposed it on that basis. It hasn't happened yet. Do you think we're actually going to see a property tax in the foreseeable future, or can the property industry continue to block it?
I think the property. Okay, thank you. So the property tax, as you just mentioned, I think it's just an argument of the developers, because we know the developers have already earned enough money to cover that at all. So, and also for the buyers in China, I think that their real estate almost double their prices. So I think that's not a big issue indeed. So I think the property tax means it's a long-term ultimate solution, because in the past, we know starting from 2003, the government tried to curb the real estate market and try to cool down the fever. So they always try to control it from demand side. So each time if they have some very tightening measures on the housing market, so there the house market depressed for a while, and then once they release the restrictions, then the prices actually increase much more than before. So I think that now they start to begin to change their thoughts. I think that in the future there's two ultimate solutions, and the first is the property tax we mentioned, and the second is for the increase the supply, rather than control the demand. So for this property tax, so we think it's very likely they will start even before the law is established 2 years later. So now there's I think there's now huge debate, how do you levy the property tax? So we think it's very likely they levy for the new deals. So they just leave the the existing deals untouched. But however, in the future, if you want to trade or maybe inherit all this kind of the housing, then you have to pay the property tax. And also the property tax is very likely to be different across regions, and to be different according to how many apartments you have, and also according to I think there will be accumulated tax. So I think in China it's always will start with a pilot program. We think the Guangzhou, Shenzhen, Hangzhou probably will start maybe early next year, and then gradually expand to many cities in China.
Okay, thank you. Over here, please introduce yourself.
My name is Kian. Dr. Hu, thank you very much for the talk. You mentioned, I was very interested to hear that you're saying that the local government debt is at a manageable level. And you also cited some examples about some cities and some provinces with some good quality assets. I'd be very interested to hear your views if you think that there are any areas, maybe you can name 2 or 3, where on the other side you believe they're of the highest concern. So if there are any areas where if it would go bad, those would be the first areas we should be looking at.
You mean related to the government debt?
Yes, yeah.
I think the first, as I mentioned that actually inside, it's for the city commercial bank. So now we know we see it's government debt, and probably we don't see their balance sheet for this kind of city commercial banks because they are not listed banks. So as I know, in many cities, I think that they are almost at the danger of bankruptcy, but just now they don't have this kind of mechanism, and they are not transparent enough. So that's why I think in the coming 2 to 3 years, for the trading for this kind of or merge acquisition for this kind of bank will be like a big trend in China. And also now China is setting up for the deposit insurance system. So I think that it's very likely to come out maybe next year, early next year. So that's also combined with all this kind of trend that will strengthen that trend. And secondly, I think as I mentioned that it's very likely for some local government, they really cannot pay. They don't have the tax revenues and they don't have assets. So that's have to depend on the government, the central government's hand and to bail out. That's also possible. We just discussed with the case. I think that he mentioned for some regions like just entrepreneurs just run away. I think it's very like the Detroit case. So I think that's the central government will bail out. In China, we still have this belief. And because the central government is still rich enough to bail out. But that's also the point we have to really concern. The third point I think we really have to concern is the one I mentioned that for the local government facility bond. So that's the local government facility in China. That means for the local government have some infrastructure companies, and most time it's infrastructure companies to build up the airway, like the airports and like the subways, and so that's a very high cost. I think now in China have like 50 cities constructing subways and 80 airports on the construction, and or like the subways now already like the highest, like the longest in the world. So for this kind of debts, actually it's very hard to be collected. So that's the reason I think that there's an urge for the government to put it in like a transparent, like a basket, like put in the government bond, and rather than at the local government facility. Because now this, I think the size of the local government facility debt, we call the LGFD, it's also very big, like in the interbank market. That's like it's about like a 2 trillion or 3 trillion. So that could be like a very dangerous, like even for the market. Just like recently, I think that from the beginning of the year, because of the with the tightening on the local government debt, so I think there's a stop in issuing new LGFD. But recently, it restarted again. Even one very small village called Chenjiazhen also issued this debt there. So we are very concerned how can they to pay back, and why the investor will be interested in buy. Thank you.
Okay. Back in the corner and then up here, please.
Hello, thank you very much for your talk. My name is Andrew Haskins. Could I please ask, are there any particular cities or regions which you think are especially at risk, or which are rumored to be particularly at risk?
I think I can give some examples for the cities, like already over, the debt over already exceeds 100% GDP. I think one, as we mentioned, that's of course the NAO didn't give the number for the 9 cities. We said the capital cities. One is Nanjing, and also its governor was arrested. So I think he did a lot of construction projects in Nanjing. So now I think it's this city. I think that is really in danger. Another city, I think it also could be put alert is probably you cannot imagine is Shenzhen. You know, after the world college sports meetings. Yeah, I think that's 2 years ago they built up the subways and a lot of new infrastructure projects. Actually, their debt is already exceeds 100% of GDP. We don't know how much, but it's very high. So for some for its the local villages, some villages for the local government already cannot get get the wages. So I think that's also very dangerous. So but for all the cities, at the end of the day, I'm not that like worried because they still have the assets. I think really the one you have to worry about is in the western and the central regions. For those governments, they don't have anything like as a collateral on hand.
Okay. Up here, please. Actually, wait for the microphone, please. They're coming up.
My name is Jonathan Mock. The question is about the accounting of all these various entities, whether it's government or financial institutions, AMCs, banks, trust companies. How much comfort do you have as far as if you think about non-performing loans? I understand there's a sort of unofficial sort of policy to not have banks report over 1%. Now, a lot of these assets are not producing revenues. I think from a Western perspective, they would be non-performing. Then when you tie that together with these other entities, how do you think about the actual, the danger? Because I think we can talk about, as you mentioned, the Western provinces do not have revenue generating. But then even these places like in Shenzhen, the Asia Games, some of those places the facilities are not being really utilized today. So how do you take comfort with that?
Okay, so for the financial institutions, first I say now, like we always said, for the next year, for the insurance company and for the securities company will be the top picks because we have very low leverage. We have like less than 5 times of the leverage. So in the future, it's expanding. And also we don't hold the clients' money. So I think that will be top picks. And for non-performing loans, I really have the concern for the trusting companies because, as you might say, for the past 5 years, for the trusting companies always provide this kind of for this kind of wealth management product, the coupon rate is over 15, even 20%. So many of them goes to the real estate. So think about that. Only this sector can generate such a high profits during the housing fever. Now the housing is gradually coming down, and with all these kind of measures, and how can they pay back? So I have the large concern now for the trusting companies, and also in the past 5 years, actually their size increased to almost from a marginal size and now to over 2 trillion. Almost over 2 trillion. So very big. I think that for the next round, it will be reshuffling there. But still, the concern is, I think that is fine because the real estate they still have this one as a collateral, so it's still manageable. And among the banks, I think I would categorize banks to 3 categories. And the first is the big 5. I think they are very safe. They now have they are among the top 10 banks among the world, and they have the monopoly position in China. They have the national champion, and I don't think they have any deep problems. So and also then their NPL, their non-performing loan is very low. After they are restructuring, I think that they are pretty healthy and will continue to be healthy. And also and also in China now about also have 2,000, we call it the agriculture cooperation bank. So that's actually in the tier 3, tier 4 cities. So those banks, many of them may not pay too much attention. So they are very similar to the US, like a community bank. In the US, we have we have 7,000 banks, 6,500 community banks, then big 4, then we have the regional banks in the middle. So these 2,000 are very similar to the US community bank. So they absorb the deposits locally and also lending locally. So their major business are actually the lending business. And there's almost no competitors. In the past 5 years, now they have more competitors because with the rising profits. Why is that? Because before China Agriculture Bank, before their listing, so they have to improve their asset balance sheet. So they just spin off those small banks in the tier 4, tier 5 cities in the villages. So I think as many of these kind of banks are privatized because at that time actually CBRC asked the private owners to acquire these banks because no one knows they can earn money or not. So for those banks, I think they have a clear ownership. clear ownership structure and have now for some banks, I'm not saying like all the banks, like all 2,000 are very good, but I already say like there is many banks actually perform pretty well because they have to like generate profit by themselves. And also for the recent years, they become the stabilizer for the local economy because they can lend to the SMEs. They actually ultimately solve these issues in China. Then the one in the middle, I think is the most dangerous now in China, is a city commercial banking. As I just mentioned that, they are the largest shareholders are local government, so they could put pressure on them to like give local government debts. And not like the big five, I think the local government now has less and less say. And also for their like the actual owners, normally it's already for the private owned because like they are the actual controller. So they sometimes even like have this kind of incentives to lend to the housing market and to get this kind of high returns. So I think that for them, for the management, I think that they are not as good as for the big five, but they also put like a less concern as the smaller ones. So I think in the future, in the coming 3 years, for this group of the banks most dangerous in China and could have to experience this kind of restructures and and that could like actually I think that also could be a very promising assets in the future in China.
Thank you. Over here, please.
Hi, Paul Pankhurst. Thanks for your talk. 2 questions. Some analysts have suggested that one option for local governments is to sell shares in state companies that they received in previous years. Just wondering if you think that's likely or not. And the second question was, I guess there's always a sense that local governments are somewhat out of control, that the central government has difficulty controlling what local officials do. Do you think the picture is improving in that respect, and how do you think that picture is changing?
So for your first question, you mean sell the shares of the local companies? The shares of the local company, yeah. I think it's possible. As I mentioned that, especially for the cities, if they are like the debt is much higher than the cap. So I think the central government have to set the cap. So in my view, it's very likely be the 40% of GDP because currently our best guess is about 20 trillion. So it's like about the 40% of GDP. I think it's very likely. So if they have to deleverage fast, so that's the only way for them to deleverage fast. So I think that it's very possible. Then you said how to curb local government. I think that really depends on like how big the efforts the central government wants to make. So I think the first, before the central government to evaluate the local governors is always like use GDP as as a major indicator to evaluate. So in the future, I think that as we just mentioned that in the note, and they mentioned that they have to put the debt as also one of the indicator to assess them. And also, according to the note, and I also heard there are some the talkings. They said for the local governors, they have to be responsible for the local debt for their life. So that means even they get promoted. So if they are the debt bought at their period, so they have to be responsible. But we know it's very hard. But in China, it's not impossible because in China, since we don't have, our political system is like a public servant. So they are always in this circle, so it's easy to track them. So they're always inside, unless they just out of the circle do something else. But in China, since we have the one track for this kind of political system, so relatively speaking, it's easier to track. Thank you.
If they do impose a debt to GDP percentage ratio, do you think it would be different by province, the way, for example, we already see electricity tariffs set at lower levels for central and western provinces? Or would you not want to set higher limits, for example, for borrowing by central and western provinces, even though they are underdeveloped economically, because they have few assets to sell if they get in trouble?
I would think that would be the same for all the local governments because that's a capacity you can borrow. If you don't have enough capacity, so you have to the percentage is the same, so the absolute amount should be lower. So I think that should be the thing.
Okay. We have 2 more minutes. Is there one last quick question in the back, please?
Hi, thank you. I'm Kenji Kawase from Nikkei. I have 2 questions, actually. Sorry, quick one, too. Okay, well, the first one is with regard to the asset management companies. There were questions previously. They're coming, Cinda is listing on the 12th in Hong Kong, and I'm sure the other 3 will follow next year or the year after. Are they, I was looking through the prospectus, and they were spinning off some of the earlier debt to the government, and they're not really done with their old debts. And then Cinda is supposed to be one of the best out of the 4. Is it possible for investors who are not really have a deep knowledge of asset management industry in China be able to trust these companies as an investment?
Okay, we're going to have to cut it off after one question there, because that's a long question already. Please go ahead. You can come up afterwards.
I think as you already observed, I think that why they choose Hong Kong, because probably the investor in Hong Kong has much more knowledge or more understanding on this kind of the asset management for distressed assets. I think that for the recent years, actually, I think they have a very low profile in China. So for the public, I think don't have too much knowledge on there. But we just know they deprived the non-performing assets to them, and the recent years actually run pretty well. So, but they're still receiving the money from the Minister of Finance. So I think that in the future, they also want to lessen the dependence on the Minister of Finance. So they want to leverage their experience to expand their asset management business. So that's why they choose let's say in Hong Kong.
Thank you very much. With that, we do need to wrap up. We always like to give our guests something to remember the club by.
Thank you.
And with that, we hope to see many of you in the new year when we resume our speakers program. Merry Christmas and a Happy New Year.